Good afternoon. Thank you to all the judges, to the CFA Institute for giving us this amazing opportunity, and to all our friends and family who are here today to support us. This equity research is presented by Alexa, Santiago, Luis, Andres, and myself, Aide. We're really proud to represent the Universidad Anáhuac Norte. After analyzing Grupo México, our recommendation is to hold for a 12-month period. This is because we have a target price of 73.32 Mexican pesos, with an expected return of 3.88%. And comparing that to the 70.58 closing price on October 28, 2022. Our positive key drivers are low cash cost in copper, a solid EBITDA margins and operative cash flows. Also, geographical diversification in sales. Strong revenue growth in transport and infrastructure businesses. Also, steady CapEx guided by an investment plan in Peru, Mexico, Ecuador, Chile, and Argentina. The negative key drivers are high odds for an economic recession in 2022, the potential nationalization of metals in Peru, also social instability in Mexico and Peru. The inflation pressures in profit and cash cost, and also metal resources are finite and reserves are speculative.
Grupo México is not an ordinary company. It's the third largest company in Mexico in terms of market capitalization and the biggest in terms of tax payments. It divides its operations in three divisions: mining, transportation, and infrastructure, with mining being the biggest one in terms of cost of capital and revenue for the company. While having profitable margins in history, Grupo México has also been the subject of serious controversies to their business model and industry in which they operate, and have been the subject in additional public scandals more recently because of the transparency of their operations. Grupo México operates in 7 countries, has 15 underground and open pit mines, 52 smelters, 8 explorations and refineries, and 4 offices where it is the most profitable and abundant mineral is copper. It makes it one of the top 6 mining companies in Latin America, with one of the biggest copper reserves in the world. Regarding transportation, it has operation concessions, mainly in north of the country, as well in Texas and Florida.
During the last 6 years, company sales has concentrated mostly in mining division. In second place, transport division, and in third place, with the lowest participation, infrastructure. Percentage by mineral are the most percentage is for copper during the last 6 years, and for molybdenum in 2021. This is due to a record copper sales price in 2021 and a stable production during the last 6 years. Mining revenues by region. The United States is the country with the largest mining sales participation. This participation has decreased since 2016. Europe has gained relevance with participation in 2021 of 26.8%, and while Mexico and Asia has decreased its participation. Last quarter, copper production has decreased compared to the same quarter previous year, but it increased compared to same quarter to last quarter to previous immediately last quarter. Sales price has been increased as cash cost has decreased during the last 5 years. Profit by business CAGR 5 year for mining business was 33.3%, 4.3% for transport, and a decrease of 24.9% for infrastructure. Quarterly and yearly profit margin. Quarterly margins has suffered since inflationary pressures increases cost and expenses of the company, while Yearly margins for the last 5 years in 2021 were at the best level. Cash flows, company cash flows are strong since cash operating flows are strong and translate into a good cash balance, but in last quarters in a decrease of the cash balance. Return indicators are strong since 2016 to 2021. All return indicators analyzed has increased, and the net debt EBITDA shows a strong capital structure as the gross margin comparison shows a strong gross margin.
We identified four main categories for the risks that Grupo Mexico faces: ESG, political, market, and industry risks. The ones that we think we need to keep an eye on are resource nationalism due to the situation in Peru, ESG because of the potential impact that the company could have in the environment and communities where it operates, and copper price, commodity prices, but especially copper price because of the high correlation between Grupo Mexico stock and the copper futures. For ESG, we see that the company has improved over the last years, but it is still average compared to other companies. Over the last 3 years, the company has achieved its ESG goals except for 0 fatal accidents in the workplace. The board of directors has an above average percentage of independence, that's 57%. The law minimum requirement is 25%. But there is a lack of women in the board of directors. Currently, there are 0 women in the board. As I mentioned, compared to its peers, the company is average. None of the scores we reviewed puts Grupo Mexico as a leading company in overall ESG scores. It's also important to remember that the company has been involved in important incidents, just like the spill in 2014 in the Bacanochi River in Sonora. It is estimated that 22,000 people were affected. By this year, 2022, the communities are still claiming for justice and damage repair. So we think that Grupo Mexico is an average company regarding ESG matters, and there's room for improvement.
Regarding the valuation, very much in line with what Luis discussed in the financial analysis, we mainly focused on the mining division for the valuation. The first part, with a 70% weighted average, was a discounted free cash flow analysis. It was based around what are the projected flows of income in the next following years, plus what is the value of the reserves that Grupo Mexico has. To value these reserves, we applied a Black-Scholes model to be able to estimate what is the real value of these reserves. The way we picture that is, Grupo Mexico has a lot of reserves and has the option to sell out the reserves or sell the reserves or keep them. Therefore, controlling when to sell them, when the price of the copper is at a better price. The multiple peers and EV/EBITDA considers the next 30% of the correlation, which gave us a final estimated price of 73.32 Mexican pesos per share. For the weighted average cost of capital, in the years analyzed, we compared it to the return on the invested capital, which showed a close correlation in both of them. Even in the 2 most recent years, we saw the ROIC with a higher level than the WACC. In order to have the most basic, in order for us to trust the projections that we had, we went straight to the basics, the price and the quantity. We saw what was the volume that the mine or the Grupo Mexico has and what was the price across time in order for us to be able to quantify what was the possible change in the revenues over time. Being able to see those changes over time was key in order for our business hypothesis, which was mainly based on the drop of copper. If the price of copper drops, then Grupo Mexico would also suffer like a devaluation or a shortage of value. In conclusion, we do recognize that Grupo Mexico has a strong and healthy financial indicators for a lot of reasons,
and its presence in the international market and reserves make it a more than pleasant candidate. However, the economic and geopolitical risks, mainly the possible recession and the Peru impact that Alexa mentioned, make our recommendation in the next 12 months hold. Thank you very much.
Thanks for the presentation. What do you have a whole recommendation when the upside potential you have it's 3.88 and we have the overnight rate close to 10%? Why is it not a sell recommendation instead?
For the discounted free cash flow model, we use conservative assumptions like EBITDA or cost or profit margins and capex and reinvestment rates to apply all the risks and all the suffer in the commodities industry and the economies from the different countries, since there's a lot of volatility currently. So we issued this recommendation of hope since we are conservative, but if one of those risks don't materialize, that will be a huge impact for the company, a positive impact that will increase its EBITDA and the profit margins and the future cash flows.
And just to complement that, the whole recommendation is also led because of the uncertainty and volatility that we are living. If China, for example, relaxes the COVID restrictions that they have right now, commodity prices could go up, and that would be a boom, and the price of Grupo Mexico. We are basing our recommendation as a whole because the company is strong financially. We expect a recession, but there's still the possibility that copper will go up because of the COVID, the restrictions that China has for COVID, and also copper will be necessary for renewable energies, and it is expected a boom, but not next year.
Following on the same question, and you're too young, but for the people that we have lived a lot of recessions, all recessions are very different, so do not think that the next one is going to be like what happened in the behavior of the prices, the asset prices in the pandemic. But the presentation is very clear, but I'm also a bit confused with the health recommendation. I do agree, the 1 year SETA rate that came out in the weekly auction this week was 10.84. You're recommending that with a 3.8 plus the dividend. So the same almost 10-11% with a very high risk. The price of the Grupo Mexico stock at some point, I think that in March this year, reached a low in the past years of 60 pesos, 120 the high in March, and 60 pesos in October, 7 months after. So you are talking about volatility. There is also very high volatility in this stock. So you have the risk-free premium at the same rate that you hold. And to say sell is not forbidden, and it's very common for the analysts to say buy or hold. And even the regulators, and that was after the dot-com recession, correct me if I'm wrong, you're the expert, but the NASD, the US regulators, changed it, and the firms had to start to disclose the percentage of buy, sell, hold recommendation, because 99% were buy, 1% hold, and 0 sell. In my opinion, I do agree. I think that with this presentation that was very clear, I would be saying sell.
Yeah, but it's hold because for new investors, we are saying don't come into this business. That's for sure. For the ones that already have this stock, we are saying just wait a little bit because it could go up. We're not expecting a high rise in the stock price. Our projections were really conservative, but there's the possibility that it goes up because of what I mentioned, right? The demand can go up because of renewable energies, and every time that there's a rumor that China has relaxed the COVID restrictions, the market and the commodities go up. So it's not for new investors, and for the ones who have it, you can wait a little bit.
Yes, also we have to take into account that there's a geographical diversification and a business line diversification that has been growing in the last few years. So this gives us a perspective that if there's a catastrophic scenario, Grupo Mexico is investing in options to avoid the impact of these scenarios.
Thank you. You mentioned among the risks the social instability, both in Mexico and Peru. Without getting too much into politics, how do you see Grupo Mexico as an investment under this government? In other words, could AMLO force them to buy Banamex at a price that is dilutive to current shareholders, or would disruptions in mines or would be meaningful for you to be concerned about the operations going forward? Or what else do you see as key risks for the social line or the political side for Grupo Mexico?
Well, first, in terms of the Banamex, in terms of Mexico, we wouldn't be sure that really directly correlates to the valuation or the price of Grupo Mexico, since the Larrea family would most likely like to leave those two businesses separate. Like, banks are supposed to be like the transparency. They have like several other regulations that have to comply and have to have like a certain image that is of transparency and reliability that honestly Grupo Mexico doesn't have right now. So it wouldn't be like the most appropriate strategy in that sense. As for the other countries, for example, Peru, the current administration has been like vocal into saying that the nationalization of those mines is a possibility. So it is a risk that we have to consider for this one. Mexico hasn't like made those direct comments the same as Peru has, but that's why this is here.
I agree, but I think the company has said publicly that they could hang Banamex under the Grupo Mexico structure. So would that change your mindset?
As for the decision to hold, you mean?
No. I mean, your analysis, would it change if they were to put Banamex underneath the Grupo Mexico structure?
Not in the short term, correct.
As we referred in the presentation, Grupo Mexico has a strong capital structure and a strong cash balance that could hold the impact, not completely, but part of it. But we think that this cash balance and this strong cash flows and the capital structure really gives Grupo Mexico the strength to face this scenario.
Good afternoon. How do you decide to not make valuation of the other divisions as the mining?
Well, in our report, we added some of transportation and infrastructure. We focused on mining division because it represents 80% of the sales. So we decided to focus on that because it's the main focus of the company. But we decided to the other 20% see it more not as detailed as we saw mining division.
At the end of the day, for Grupo Mexico, that could also be an added value to the company and the company structure and where they get all of their money. But their main focus at the end of the day is always mining, so is ours.
What do you think about the molybdenum? Have a potential?
Yes, it has a potential since it's related to the copper extraction. It represented an important part of participation in the revenues for 2021. But as the same we said, the Grupo Mexico needs to focus on copper and to grow the rest of the lines the business lines like transport and infrastructure that in the last quarter compensates the drop on the revenues and the profits in mining business.
Just to complement that, we did know that our analysis did show that copper was 80% of the production for Grupo Mexico, and molybdenum was a close second, with a good share of, I think, was 13% average in the last 5 years, and then the other minerals followed. But yes, it was part of our consideration.